Good morning, BPI traders. My name is Rich Lim, the banking analyst for BPI Trade, here to answer another question from our Facebook page. Now, our question this week comes from Reina Gonzalez Agkawili. The question is, RA 10641 is an act allowing the full entry of foreign banks in the Philippines. So what is the implication of this? Is there anything to worry about? And how will our local banking stocks be affected? A very good question, Reina. So what is the latest on the Philippine banks? Now, the Philippine President recently signed RA 10641, or the act allowing the full entry of foreign banks in the Philippines. Now, this means that foreign banks can own up to 100% of any existing bank through purchase or acquisition. Previously, foreign banks are only limited up to 60% of ownership as stipulated by RA 7721. So what does this mean for the banks? That this development will actually force the large Philippine banks to think about merging with other banks to increase their asset size. Take note, our banks are really small compared to other banks in other parts of Asia. For example, BDO's market cap is only $7.5 billion as compared to CIMB's $18.2 billion in Malaysia and DBS of Singapore's $35.6 billion. Now, with markets opening up, asset size is the key to the bank's success. After all, the name of the game is scale. Now, how then should investors like you position themselves in an M&A scenario? We prefer buying the targets. We expect large banks like BDO and Metrobank to actually acquire mid-sized banks. Potential targets include PNB, Security Bank, Union Bank, RCBC, East West Bank, Asia United Bank, and Philippine Business Bank. If the targets were to be bought at 2.5 times their price-to-book ratio, some banks could have a potential of up to 40% upside. Anyway, it's really going to be a very exciting time for the banking space. For more ideas, come visit us at www.bpitrade.com and see what else we have in store for you. Thanks for listening, guys.